All right, gang, let's review a little bit. We've learned a little bit about the characteristics of millionaires, the fact that they're mostly college graduates, they're married, they are investors just like you in the stock market game. They work hard for their money, they didn't necessarily inherit it. We've also learned about compound interest and the importance of having money work for you over a long period of time. And the fact that it really doesn't take a whole lot of money when you think about it per week coming out of a paycheck to actually become, in a number of years later, decades later, become financially independent. So I mentioned to you, you need to start when you're young. You have to have enough willpower to live within your means, not spend all your money every time you get a paycheck. You need a career, some kind of way to earn income so you can have that saving and investing that you need. And here's the fourth piece, some education, some knowledge, some learning about investing. And that's what we're going to do next. All right, I'm going to take you to one of the many websites that you can use for doing research on companies. This one is Yahoo Finance. So you can see the URL up there. It's very, very student-friendly, I think. And we're going to start with looking up a ticker symbol. When you play the stock market game, you have to have the ticker symbol before you can invest. So today I'm going to take a look at two companies that I think you're familiar with. We're going to look at Domino's Pizza, and we're going to look at Papa John's. Do you have a preference right now? Do you like Papa John's better than Domino's? Do you like Domino's better than Papa John's? Well, let's take a look at those two companies, see which one you think might be a better investment. All right, here's how you start. Up here in the search box, you want to start typing, let's do Domino's first. And we don't have to get very far before we get the correct ticker symbol, DRZ. Now remember, when you're playing the stock market game, the ticker symbol has to be just letters. You don't want to have a ticker symbol with a dot or a dash or a colon or any other thing other than just letters, all right? Because that'll take you to the stocks that are available for the stock market game. So here's Domino's, and we're going to first, as we come up the screen a little bit, here's the current price for one share of Domino's Pizza, $391.33, all right? Now it changes, all right? It's going to be changing as I speak because we're doing this in the morning, all right? It's after the market has opened at 9:30. So what's happening now is investors are buying and selling, and changing the price of Domino's as we speak. Right now it's down a little bit. It's down $3.79 from where it closed yesterday, which is about a 1% change in the downward direction. So if we look at our chart, here's what's happening today, which is kind of interesting, but not all that great. We're going to take a look at year-to-date first, all right? So if we go back to January 1st of this year, and if you put your cursor right here, where it started in the beginning of the year, you'll get a black box on the other side telling you the price of Domino's back on January 1st, in our case 2020. So notice it was $291.85. It is currently $391.27. So had you bought Domino's Pizza stock back in the beginning of the year, you're a very happy investor. Domino's is up about $100 a share. Right? $100 a share increase on Domino's since the beginning of the year. So there's our current price. Here's how it looks on a chart. All right? And notice we could actually go out for a year, which takes us back a year from today. We could go out 5 years. We could go out to the max, all right? All the way back, in this case, to 2004. All right? So had you been an investor back in 2004, you're extremely happy as an investor because Domino's has been a very good company for you to have invested in. All right? Well, let's take a look at some other numbers that are important. I'm going to start with the market capitalization. Market capitalization is when you take the current price of the stock and you multiply it times how many shares are out there. All right? There are literally hundreds of millions of shares. All right? So the market capitalization of Domino's Pizza is $15 billion company. All right? If you were to sell all the shares of Domino's right now at that price, you'd have $15 billion. All right, beta. It's kind of an interesting statistic because the beta, it ranges from 0 all the way up to beyond 2. Right? or it could be even higher than that. But the way to read this is a beta of 1 would indicate that the volatility of this company is about average for the companies in the stock market. Right? So a beta of 1. A beta less than 1, like Domino's, is 0.41, means it's less volatile. It doesn't change as much from one market session to another market session, nearly as much as most companies in the stock exchange. When you get a beta greater than 1, it means that it is more volatile than the market in general. So what this beta number of 0.41 tells us about Domino Pizza is this is not a very volatile stock. It doesn't going to change a whole lot from one day to the next. It does tend to be very volatile. Now, it could become a very volatile stock if something in the news happens that changes how investors feel about Domino's Pizza. All right, next, price-earnings ratio. Well, we know the price, in this case $3.90. And what we're going to do is compare that price, that's the P part, with the earnings per share. And what the TTM means is trailing 12 months. So over the last 12 months, Domino's profits per share, remember there's hundreds of millions of shares out there, Domino's profits per share were $11.69. So if you own 1 share of Domino's and you paid $390 for it, your part ownership of that company would be represented in profits of $11.69. So the price-earnings ratio tells you that you are paying 33 times earnings if you were to buy it right now. 33 times $11.69 approximately gives you $390. So you're paying 33 times earnings to buy 1 share. All right? Well, what's that number represent? Well, it actually depends on the industry. In a few minutes, I'm going to take you to Papa John's and we'll be able to compare the price-earnings ratio of Papa John's with its earnings compared to Domino's and its earnings. Remember, earnings, profits. All right? Now, next thing to look at is the dividend. All right? A dividend is a share of those profits. So companies can choose to give their shareholders part of the profits back in the form of a dividend. Well, Papa John's, the last time they declared a dividend, which was October the 8th, they said that we're going to give each shareholder $3.12 back because you're a shareholder. We're going to give you part of that profit, $3.12 per share. All right? Well, $3.12 compared to the current price gives you a dividend interest rate. Remember interest rates? 0.82%, a little less than 1% interest. All right? So that's when you're holding on to the stock. You get $3.12. Last time they declared a dividend represents a little less than 1% that you're getting back as a dividend. All right? Next time they're going to declare dividends is in December. All right? So that could change in December. Now, it's really important before you invest, you have to make sure you know what the company does. Well, I think we all know what Domino's Pizza does and what Papa John's does. But if there was ever any doubt in your mind about what that company actually does, always go to the word profile. If you click on profile, go ahead. You go down, you'll see who owns the company, who runs the company. You'll see where they're located in the United States. But then it gives you a little description. This one doesn't have to be very long because we know what it is. A description of what Domino's Pizza does. All right? And as you might suspect, they have subsidiaries and they have franchises, and all those companies are basically in the business of producing pizza, all right? And selling it to the public and delivering it and all kinds of things that they do. All right? Now, if you go back to the summary page, let's take a look at the same numbers for Papa John's. All right? So those are the 2 companies that we're going to look at. So we start typing Papa John's in the search box. We find that Papa John's has a really clever ticker symbol, PZZA. And let's take a look. All right. Now, do you remember the price of Domino's? $390 or so, right? Well, notice that Papa John's, 1 share, only costs about $82. All right, $82.83. Also down a little bit today. Not quite down as much as Domino's was. All right, let's look at market capitalization. Remember, that's the price of the stock times how many shares are out there. Papa John's not nearly as big a company. It's only worth about $2 billion. Remember, Domino's was a $15 billion company. Look at the beta. Remember, that's the volatility index over 1. All right, so a little more volatile in terms of up and downs of the stock as investors take a look at this. A little bit more than Domino's, so it's a little more volatile. Price earnings ratio, let's look at these two numbers. Here's the price of the stock. Here's the earnings per share, 82 cents. Remember, Domino's was $11 and something, right? All right, so Papa John's only earns about 82 cents for every share out there, whereas Domino's was $11. So a lot bigger earnings power for the bigger Domino's than for Papa John's. And look at the price earnings ratio. If you were to buy one share right now and only get 82 cents as your share of the profit, you're spending 100 times earnings. 100 times earnings to get one share of Papa John's right now. Remember, Domino's was 33 times earnings. So in relative terms, Papa John's is actually more expensive when you look at it from an earnings perspective, because you're paying 100 times earnings to buy one share, whereas with Domino's, you're only paying 33 times earnings. Okay? Now, dividend. Like Domino's, Papa John's also has a dividend, about 90 cents here. A little over 1%, so a little bit more generous dividend. All right? But the next date, November the 9th, which was 2 days ago, right? So they just paid that, 90 cents. And once again, let's go to the chart. Here's one day. Let's take it to year to date. We'll compare the two companies that way. Had you bought it on January 1st of this year, you'd get a black box again. About 63 bucks. It's now $82.95. You're a happy investor. That happened, worked out for you. Let's go to a year. A year ago, had you bought it, just about the same, about 60 bucks. Right? It hasn't changed very much. 5 years out, and then max. So, like Domino's, the pizza business has been good. All right? So, despite that you're paying a whole lot more per share in terms of the price earnings ratio, you would say to yourself, Papa John's has been a pretty good investment too, just like Domino's has. All right. Now, if we want to go to a chart right here, we'll see the word chart in blue. Let's go to chart. And right now we have Papa John's being reflected in our chart. And it goes back a year. All right. So here's our chart of the sales price of Papa John's compared to the volume, which is how many shares are changing hands. All right. So when you see these spikes like this, that's a high volume day. A lot of people were interested in Papa John's. Then normal, wherever you see these spikes. And if it's a red spike, the interest that day was not only a lot for Papa John's, but they wanted to sell Papa John's. Greens, people were buying Papa John's. So you notice you see reds and greens here. Now what Yahoo does for you in your chart is you can compare companies. All right. So let's go back up here and we'll do a comparison. Ticker symbol for Domino's, remember, was DOM. I'm sorry, DPZ. Sorry about that. And go ahead and save it. And now we have two lines. So we can compare the blue line, which was Papa John's, with the lighter colored blue line, which is Domino's. All right? And the index on that far side is in percent. All right? So if you're looking at this the way I am, you'll see that Papa John's has had about 5% increase in price over the last year, whereas Domino's has had a 115% increase in price over the last year. All right? So Domino's, Much better in terms of return on your money than Papa John's, but both of them have done pretty well. All right? All right. So that's chart. And there's two companies. Now, let's go back to the summary. And while we have Papa John's up here, let's come down the screen. And we're going to start seeing if there's any news about Papa John's. All right? So here is an article. And somewhere in this article, it's going to mention Papa John's. Right below that is another article. Somewhere in that article, they're going to say something about Papa John's. So here's one that says 3 takeaways from Papa John's third quarter earnings. So third quarter earnings would be July, August, September. All right? So in July, August, September, Papa John's is going to report or has reported a per share of 35 cents for the quarter. All right? Not for the year. That's for one quarter, for 3 months. So that's better than they were doing in the previous quarters. Right? Here's another article. So it's really important as an investor to keep up with the news about the companies that you want to invest in, along with all these other numbers that I'm throwing out to you. All right? So keeping up with the news is really important, because you might find there's a change in leadership. You might find that they have an announcement of new customers that they brought in, a new product that they're putting out, a new way to deliver, a new packaging. There's all kinds of things that can happen with the pizza business. New product where they take something like a cheeseburger and add it to pizza, right? Or taco seasoning and add it to pizza. Who knows? But all those things could affect the share price. All right? Now, one of the things that you can do as an investor that Yahoo helps you with is you can use something called screeners. So if you go up to the top there, you see the word screeners, and come down to equity screener. Equity is just another way of talking about stocks. Right? Notice there's also a mutual fund, exchange traded fund also. Here's a screener. Now what you can do with a screener is you can start pinning yourself down in certain sectors and industries for the companies that you're really interested in based on the news that you've been looking at. All right? So we're going to take a look at the United States, companies in the United States, and we're going to do market cap of mid cap and large cap. All right. And price, remember for the stock market game, the sale price when you buy a stock has to be at least $3 a share. So let's go ahead and put $3 in here. And the sector. Next, the sector. Consumer cyclical is what we're going to look at. And add the industry. And we're going to do restaurants. And then we're going to find stocks. Maybe we can find something even better than Papa John's or Domino's. Who knows? We got 25 results. Let's take a look. Here's some names you're probably familiar with. Here's Chipotle. All right, you've probably been to Chipotle. Very expensive, $1,200, almost $1,300 a share. All right. Let's see what else we can. How about Yum Brands? All right. This is your Taco Bell, right? That's in Yum Brands. KFC is in there, right? Notice there's a separate one just for China. China really likes KFC especially, all right? Restaurant brands. Here's Domino's, all right? Here's Domino's. And if we keep coming down the screen, we see Dunkin' Donuts. And here's Domino's Enterprises. Don't we have pizza in here somewhere? PZZA. There it is. There it is. Okay, there's our Papa John's. All right. Now, a useful tool as you do these screeners. So we've screened for companies in this big sector, consumer cyclical. We've kind of narrowed that down to restaurants, and we're looking at mid-sized companies and large companies, and we came up with 25 choices, and a lot of names that we know. Now, as I walk over here, this is a very useful little graphic over here. This tells you where the current price is, see the exclamation point? Where the current price is compared to the 52-week high. All right? And you'll notice that almost all these companies are pretty close to their 52-week high. So they've done well in this 2020 environment that we're in. But as we come back up the screen, we can see that there's one company that's in this restaurant industry, that's in this consumer cyclical sector, Whitbread PLC. It's the only one that has the current price way below the 52-week high. All right? So for investors like me, I become pretty curious about companies like that. I don't know anything about Whitbread other than I think it's in the United Kingdom, and I think they're in the restaurant hotel business. But I need to do a whole lot more research to find out why the price is so low right now compared to the 50-week high, when all of these other companies seem to be doing much better in terms of their price appreciation for this year over the last 52 weeks. All right? So hopefully I've helped you out a little bit in terms of figuring out how to look at companies and how to determine if you'd like to invest in them. The key, I'm giving you just a little piece of that knowledge now that you need for the fourth piece. All right? Remember, you need to be young, get started early. You need to have willpower, live within your means. You need an income and some knowledge about investing. I've given you some of the basic research tools that you can use in Yahoo Finance. I hope it's been helpful, and I hope you'll have a very successful stock market game experience. Thank you.